start by thanking our presenters today. So we have with us Pat Anderson, our HCAM's VP of Reimbursement and Finance. And we have Betsy Russ from Plant Moran joining us as well. Next, I want to take a moment and thank our sponsors. We do have two sponsors for today's webinar that are bringing this webinar to our members free of charge to all of you. So thank you to Reliant Rehabilitation, Danny Rivas, and 5-Star Telemed, Justin DeRezzi. My screen going. Okay, there we go. Reliant did provide a couple of quick slides just telling you a little bit about their company. And I will also be putting 2 documents into the chat box in a couple minutes about our 2 sponsors that you guys can review at your leisure. I do want to go over a real quick housekeeping note. We do have a chat feature on Zoom, and we have a Q&A feature on Zoom. I will be monitoring both features, so feel free to stop into one of those panels, type in questions as they come up, and at the end of this session, we will review those questions and answer as many as we can, time allowing. At this point, I'm going to turn it over to Pat to go ahead and get started.
Good morning, everybody. Thank you for joining us today. During this time, I hope everybody's staying safe and healthy and doing the best they can under the circumstances. Thought this was an appropriate time. We did a seminar a couple months ago on finance issues and that. Thought it was a good time to update and bringing in some other pieces along the way. As you can see, the agenda's there. And we'll get started. We've allotted 2 hours for it. We can fill the time, or if we get done early, that's fine. But thank you for joining us, and special thank you to Betsy Russ from Plant Moran for helping us put this together. And Betsy, I'll let you take over. Mary, do you have Betsy on the line?
She is on. I'm checking to see if she's muted. Hold on.
All right, thank you. We're all learning our new technology, so bear with us.
Betsy, you're muted. I'm trying to unmute you, but it's not working on my end. I think you have to unmute yourself.
Mary, I was trying to use my phone. Can you hear me now?
Yes.
Okay. Are you getting any feedback? Because I'm logged in from my phone and my computer.
Nope, you're good. Okay, great.
So I'll start over since you haven't heard anything I said. So good morning, everyone. I apologize for that. Thank you to HCAM for having me this morning, and thank you again to Reliant and 5-Star Telemed for sponsoring this morning's event. So as you can see from the agenda, we have a lot of topics to cover today. We're going to spend some time recapping the various federal stimulus funds that you all have received so far, what might be coming next, and what you need to do to account for those funds. We're going to also talk about what's upcoming with Medicare payments and what you might be able to anticipate for 10/1/20. I think with the pandemic, we certainly haven't spent too much time talking about PDPM and our regular Medicare rates, so we will touch on that this morning. Then we're going to shift gears to talk about what's coming with Medicaid rates. There's a lot going on in the Medicaid funding arena that is important for you to be aware of and to keep track of. And then finally, the HCAM team will walk through some legislative updates and what's happening on testing and potential funding for ongoing testing. So with that, on the next slide, let's start by recapping the federal stimulus funds received to date. So this is a visual depiction of a number of the stimulus distributions that have been made so far. And if you've been able to keep track of the legislation, you know, amidst this very trying time with operations, you know that there really were actually three major pieces of legislation that were passed by Congress. One of those pieces of legislation sent additional federal matching funds for Medicaid programs to all of the 50 states. And as of this point, you know, there has been various and varying responses to the use of that money by states, and we'll touch on that a little bit later. And then most of the stimulus funds that have been distributed were distributed out of the third piece of legislation, which was the CARES Act. And that particular act ended up funding $175 billion in total relief, and about $100+ billion of those funds have been allocated so far as skilled nursing facilities. You received funds in the general distribution, which we're going to walk through, what was called the general distribution. That was checks 1 and 2. And then there was a SNF specific tranche late in May that sent another $5 billion to all of the Medicare certified SNFs in the country. So if we look at the next slide, this walks through a little bit more of the details on who got paid what, and maybe some of the ongoing issues that relate to these checks. That first check, the first general distribution, was paid out to providers based upon your 2019 Medicare Part A and Part B volume. There were some issues that some SNFs did not get paid, particularly if there was a change of ownership. And I think some SNFs, unfortunately, are still struggling to sort through that. But the majority of SNFs did get a payment that approximated 6.2% of their 2019 Medicare volume. Then the second check came out, and these checks were part of that $50 billion distribution. And this time, with the second check, the Department of Health and Human Services said, our formula for this distribution is actually to pay providers at 2% of the 2018 net revenues. So for this distribution, they used your Medicare cost report, multiplied your patient service revenue times 2%, and then deducted the first check that you got, and then paid you the balance. So there were some SNFs that are high post-acute SNFs that would have received checks in the first stimulus that were already higher than that 2% level. So many SNFs didn't get that second check. Now, unfortunately for all of you, there was a lot of confusion in the attestation and in the terms and conditions. And you know, there really was a very high level of frustration, I think, for folks in trying to sort through how to attest for the money and then how to apply for more, which I'm going to come to in a minute. So then the third potential check was issued, and with this check in the SNF-only tranche, any SNF any licensed skilled nursing facility received a check for $50,000 for the facility plus $2,500 per licensed bed. So with this particular tranche of money, this one seemed to have the least issues associated with the distributions. and the majority of SNFs did receive their checks without a lot of challenges. Now, as I mentioned, after that second check, there was an opportunity, and in fact, there was direction given that after you attested to the funds, you were also to go into the provider portal and document and basically attest that the funds that they gave you based upon that Medicare cost report were in fact accurate. And they were asking you to attest to that by submitting tax return information. And you were able to submit tax returns either for 2018 or for 2019. And they also asked that you report lost revenue for both March and April. So without a lot of guidance on what they were going to do with that information, it would appear now that some providers have in fact received responses to the information that they've submitted in that portal. Some providers have received letters that have indicated that no additional payments are going to be made at this time and that there is no appeal process. Now, as a reminder, this additional information was all because they had not distributed the full $50 billion from stimulus checks 1 and 2. So they were asking providers to submit the additional documentation, validate the revenue that we use to come up with these checks, and we'll decide if based upon lost revenue and the substantiated information, if we need to distribute more funds to you. So if you got one of those letters that said, you know, no additional payments are going to be made from the $50 billion and there's no appeal process, it should have also indicated that you would not be precluded from receiving additional distributions that may come from a subsequent tranche. Now, some of you may have received letters that indicated that additional funds were being deposited to your bank account. And in reviewing those, it would appear that if your organization documented lost revenues for March and April, that HHS contemplated how big a loss that you incurred and applied some measure to decide if the loss was great enough to warrant additional funding. So we have received letters from providers that their additional funds equated to 2% times the differential between the revenues that they reported for substantiation. So for example, if originally they paid you on $1 million of revenue from your Medicare cost report and your tax return that you submitted as substantiation said $1.2 million, they would have taken that $200,000, multiplied it by the 2%, and granted a check for the differential. If in fact you had substantiated that differential through the amount of lost revenue that you reported for March and April. Now, similar to other challenges that we've had with the stimulus funds, it hasn't always worked out perfectly in these letters, and you may have found that your particular organization received a check that you can't really explain what math was used by HHS. If you did receive a check, there is a process indicated on the letter for continued follow-up. So I'll pause there, Mary, in case there's any questions coming through on the chat on that topic right now before we move on.
I don't see any questions yet. I think we can continue.
Okay. Great. Next slide. So with all of these stimulus funds that you received, each check required attesting to the terms and conditions of receiving the money. There was also indicated reporting requirements for reporting on the use of that money, and I'm going to provide an update. And so far, there's really been limited guidance to date on how you're going to justify the use of these funds. For those of you who've been tracking this closely, you know that those FAQs seem to be updated almost daily, and so we're continuing to receive updates on the information, and it's my guess that it will likely be a couple of months until we have absolute certainty about what the attestation process ultimately is going to look like for you to demonstrate that you used the funds. But having said that, let's take a few minutes to discuss what we know today. Next slide. So with the key terms and conditions, one of the key terms and conditions indicated that the recipient would certify the payment would only be used to prevent, prepare for, and respond to coronavirus, and that the payment shall reimburse the recipient only for healthcare related expenses or lost revenues that are attributable to coronavirus. So if we take the category of healthcare related expenses and we look at the FAQs, it is a broad term. It may cover a range of items and services. And I think one of the points of emphasis early on, there was a lot of discussion about whether or not you had to actually have COVID-19 positive residents in order to have some of your expenses qualify. That's not the case. The term expenses is broad, and it's intended to cover prevention, preparation, and response. So there is a list here of items that they specifically call out as being qualifying healthcare related expenses. I would suggest that I think this list will continue to get refined and expanded, and that, I would use your best judgment under the concept of prevention, preparation, and response, and know that the intention of these funds is that individual providers may need to use them in ways that are not necessarily uniform, because individual providers' experiences have not been uniform. There's been a wide amount of variability in terms of geography and maybe the level of pandemic in your particular facility with residents and staff. So I would recommend that you think about this with a lens of being broad and potentially being liberal in your view of this, but to supplement that with good documentation and maybe make sure that you're creating notes for yourself to demonstrate why you feel that certain expenditures qualify under this legislation. Next slide, Mary. Lost revenue. So for the situation of lost revenue, so we know that we can demonstrate that the funds were used either for expenses or lost revenue. The term lost revenue means any revenue that you as a healthcare provider lost due to coronavirus. So you can see here they specifically call out items that one would expect to find with a healthcare system in terms of fewer outpatient visits, canceled elective procedures, or increases in uncompensated care. But if we think about our skilled nursing facility environment, We think about our regular routine services, whether they're from Medicare, Medicaid, or private pay. We also need to contemplate any Part B services that may have been lost due to coronavirus. So again, as long as that lost revenue relates to the coronavirus pandemic, it should be considered within the context of the federal stimulus funds. Now, one of the things that I think is important to understand is a sentence in the middle of this current guidance. Providers can use provider relief fund payments to cover any cost that the lost revenue otherwise would have covered, so long as that cost relates to the coronavirus. So when we think of the concept of lost revenue, and this is important when we think about whether or not you as a provider received additional funds from other sources, potentially the Payroll Protection Program loans, which we'll get to in a minute. So specifically, the government is calling out lost revenue or incremental expenses. And that distinction is important, and I'm going to walk through it in a minute. Next slide, Mary. So a final term and condition that I want to highlight this morning is that the recipient certifies that it will not use the payment to reimburse expenses or losses that have been reimbursed from other sources or that other sources are obligated to reimburse. So here we're using the example of the Payroll Protection Program loan. So under the CARES Act, there's no ban to having both funds from stimulus checks, the Provider Relief Fund, and having, for example, a payroll protection loan. And there's also no ban to accept funds that may come from another source. So as you'll hear us discuss this morning, we continue to be hopeful that there's going to be opportunity to have additional Medicaid funding. But this term and condition is stating that you as a recipient of this federal stimulus are not going to use payments from the federal stimulus funds to cover expenses that someone else might be covering. So if you've got a payroll protection loan and you are using that loan to cover payroll, potentially to cover incremental payroll associated with making adjustments to pay for your staff, or to cover some of your mortgage and related building costs, you can't use those same costs to qualify for your lost revenue. So we're going to walk through an example on the next slide. Now, unfortunately, while we have this broad guidance under the key terms and conditions, currently, what we do not have is we do not have definitive examples from HHS on the math that they may use to contemplate these situations. So Mary, let's move to the next slide, and I'll explain to you what I mean by that. So on this next slide, how are we going to interpret losses in revenue? Here's a couple of ways that it could get looked at. So if we start from a baseline on a very simple exercise here to consider this. Let's say prior to the pandemic, we had operating revenue of $1 million and operating expenses of $200,000. During the pandemic, we lost revenue of $300,000. And we calculated that lost revenue as the difference in revenue that we had that is associated with both change in census and change in mix. And I know there's a lot of questions that have arisen on this. and whether or not you're really only looking at a drop in census times an average rate, or what happened if you had a drop in census, but your payer mix shifted. So part of it was offset by better payer rates on skilling folks in place. Our guess is at this time that ultimately the formula will contemplate both, so that the lost revenue I'm showing here contemplates that you lost census, but you did have some bump in average revenue because you were able to skill more people. So under this example, we had lost revenue of $300,000. Our operating expenses went down by $125,000. You can see that in the expense management because our census went down, and so we were able to flex with our variable costs. But then we also had incremental out-of-pocket COVID-related expenses for PP&E, for example, of $25,000. So when it's all said and done now, in the midst of the pandemic, our operating revenue is $700,000, and our operating expenses have been reduced to $700,000. So now, as a result of the pandemic, my net income in my facility has gone from $200,000 to zero. Now, one interpretation on how we're going to reconcile might say, I'm going to be able to account for all of my lost revenue. That would be $300,000. And I'm going to be able to account for my COVID tracked expenses of $25,000. So in my stimulus reconciliation, I'm able to justify $325,000 of impact of the pandemic to compare to my stimulus funds received. That would be one interpretation. Another interpretation might be that if I really looked at this facility pre and post pandemic, the net impact to this facility was $200,000. So the stimulus reconciliation could say, well, you have to document, and we're only going to account for a $200,000 impact for this particular facility. Now, a third interpretation might be that actually embedded in the expense management sort of gets buried much of the hero or incremental pay that I gave my employees, which would yet be a third interpretation. So unfortunately for all of you, we do not have the answer to how this is going to be interpreted. And we hope that guidance is going to be coming out in the near term. But as of this point in time, we still do not have guidance. On a later slide, some of you may be familiar with the fact that initially in the terms and conditions, there was reporting that was supposed to start 10 days after the quarter end. So we're coming to a quarter end here of June 30th. So that implied that by July 10th, we would have to respond and explain to the government how we've used that money. On a recent update to the FAQs, it came out on June 13th, they indicated that these quarterly reports are not going to be required. However, the terms and conditions do allow the secretary to ensure compliance with payment terms and conditions, and that HHS will be requiring recipients to submit future reports. So in summary, what we know today is that the good news is you do not need to account for this by July 10th. It is likely that the accounting for this will not be determined until potentially after the federal fiscal year ends on September 30th, which, I guess if we're all lucky, may coincide with a diminishment of the pandemic, although most experts are saying that that may not be so. But I think what we can only do today is to continue to have diligence in how we are tracking these expenditures and to be mindful that we will have to report on them, and that, our view of whether or not we've really used the stimulus funds may vary depending on the ultimate interpretation. Now, before we leave this slide, I think this is where, so this is a simple example intended to focus on the stimulus funds. If you are a provider that also has a payroll protection program loan, you will have the complication of the operating expenses that we're showing here, the 800 grand. Some of these expenses will have gotten covered with the payroll protection program loan. So we'll need to also factor this into the stimulus reconciliation. And then a third category of potential reconciliation would be any additional funds that we receive from our own Michigan Medicaid program. And we'll talk about that in a little more detail in a few minutes. So my slides, somehow I got my slides a little bit out of order. So Mary, if you could go ahead to slide 12 for a minute.
Betsy, which one is 12?
The one that says accounting consideration.
Okay.
Thank you. Sorry about that.
There you go.
Thank you. So one of the things I want to bring to folks' attention as well, because many of you may not be familiar with this concept, it's the concept of single audit. So single audits are governmental requirements. There's a Single Audit Act that requires a special audit employed under government auditing standards when you receive specific grants from the federal government. So this is one of the things that I don't think was contemplated by HHS when they were trying to roll out the funding of this program and to quickly get stimulus funds into the hands of providers. Technically, under legislation and regulations that exist today, every provider that received stimulus funds could potentially be required to have a single audit conducted, which would mean you would need to have an audit conducted by a CPA firm to establish that you utilized these funds in connection with the stipulated purpose. So we do not have a definitive answer as to whether or not a single audit will be required. We don't think so, because we believe this is why they're continuing to contemplate how they're going to ask providers to report the use of these funds. But ultimately, they could decide that they do want providers to report these funds and have an outside entity audit them. So again, this is not known at this time, but this is something we will be monitoring closely. Next slide, Mary. Nope, not that one. Okay, there's
think, Mary, in
All
slide
right.
14, maybe, we have to go back. The one that says
Yeah,
reporting to the HHS?
The one I want is the one that says payroll protection program loans from this morning. Final slide deck there. I think it's in there. Back up, sorry. I probably should have been the slide controller. Yeah, I don't think this was the final deck. So I'll just talk about this information. I don't think you have the final one loaded.
Do you have it? Because I can give you control. I can give you screen sharing.
Sure.
Okay, give me 1 second.
That might be easier while I'm jumping around anyway.
You should be able to share your screen now.
Okay. Can you see it? Mary, can you see my screen? Pardon me?
Not yet.
Oh, boy. I don't love technology. Why don't we just go back to yours, Mary, and I'll just talk about the points I was going to share. I did notice in the chat window that folks have asked about the PowerPoint slides, so maybe if you could address getting those distributed to folks while I'm getting organized.
Those will be posted on our website under the COVID resources where we post all of the recordings of these webinars. We will also post the actual PowerPoint in PDF version for you guys.
Okay, so just a few other updates then on the payroll Paycheck Protection Program loans. So to date, a whopping $515 billion in these loans has been made. About 13% of the loans, or $67 billion, have been distributed to healthcare and social service type entities, and $16 billion of those loans have been made in Michigan. The Flexibility Act of 2020 extended the option to use the loans to cover expenses. Originally, those loans were designed to cover payroll over an 8-week period. They've extended the timeline for which you can demonstrate use of the funds related to the forgiveness provision of the loan to a 24-week period. There was also some adjustments in how you could contemplate and consider the forgivable portion of the loan. That was reduced a little bit, but on the flip side, they also did extend the repayment timeline for the loan portion. So as you may or may not be familiar with, these loans were designed to have a potentially forgivable piece that would convert to a grant, and then a piece that would be, the remaining piece would be a loan with very friendly repayment terms. One of the additional pieces that was just modified was that we are now allowing folks that receive these loans to also defer payroll taxes, the FICA portion that you pay on your wages. Initially, under the legislation, it was an either-or situation. So that opportunity provides an additional ability to improve your cash flow a little further. So there are still some opportunities to seek these loans. There is the ability to continue to get a loan. There are a lot of technical requirements. These loans come with significant reporting and compliance requirements, but they may be very advantageous for your organization, particularly if the stimulus checks that you have received are not having much of an impact compared to census declines or some of your incremental expenditures. So this is an opportunity, and I would recommend talking to your banker about opportunities under this program because it is very technical. So flipping back to the other Medicare payment information for a minute before we switch gears and move to Medicaid. As a reminder, the 2% sequestration reduction that has been applied to our Medicare claims for quite some time has been suspended for claims with dates of service between May and December. So you're probably just now having processed your May claims and you'll start to receive the cash flow on that. The 2% sequestration adjustment should be removed by your Medicare intermediary when they settle those claims, and that should occur all the way through the end of the calendar year. As I mentioned in my opening remarks, PDPM has kind of gotten pushed aside. We haven't really been able to focus on it and to understand how well folks are doing under the new system. Hopefully later this summer, we will be able to analyze in earnest some of the performance that we've seen under PDPM from October 1 of 2019, essentially through March when really pandemic operations took over. As we prepared our 2019 cost reports, anecdotally, I think, what we saw from preparing those cost reports is that most organizations had a bump up in their average Medicare rate. Some had a pretty sizable increase, others it was, more modest, but for the most part, probably in the neighborhood of $15 to $20 per Medicare day. Part of that relates to the favorable bump that most received on the conversion to PDPM. And so, it'll be interesting to see when we can look at rates from 1/1/20 on, if that increase was sustained or where things might stand today. But I suspect for most of you, once the pandemic has stabilized, it will likely be a good time for re-engagement on some of those assessment protocols and documentation protocols under PDPM to make sure that you are optimizing revenues that are available under that new reimbursement system. As you'll hear us talk about when we move to Medicaid, the state of Michigan has also indicated an interest in using PDPM principles for modifying our reimbursement system. So it is going to be important for us to turn our attention to this once again when time permits. So what are our rates going to look like on 10/1/20? The proposed rule came out in April. It is typically finalized in August. The proposed rule came with a 2.7% market basket. So that's our inflationary adjuster. That got adjusted down to 2.3%. There's some behind the scenes adjustments that were passed in previous years' legislation that hold back a portion of that inflationary adjustment. So it ends up getting adjusted to 2.3%. Another important change for this year with the rates, there were some counties that moved wage index categories. So Berry and Van Buren counties became rural counties. Ionia and Shiawassee became urban counties. There was a name change in one of the areas, one of the CBSA areas. So if you are in Berry, Van Buren, Ionia, Shiawassee, for example, and you did move categories, there is a 5% cap on any reduction in the rate that could happen to you as a result of moving to the new category. So when the final rule comes out in August, for those of you moving to rural, it's likely that that rural designation did decrease your rate, and this provision would suggest a 5% cap on that reduction. So not good news, unfortunately, for those two categories. And I would expect that Ionia and Shiawassee, because they were rural, moving to urban, likely go the other way. So those are the updates that we had on what's happening with Medicare and the stimulus funds. I'm going to pause for a minute to see if we have other questions that I can address before we move on to some of the Medicaid provisions.
So Betsy, there's a question in here that says, does sequestration impact the Medicare Advantage plan payment?
Yeah, I'm not sure of the answer to that question. It's a good question, and I'm not sure if that does apply to Medicare Advantage claims. So that's something Pat and I can do some research on, and we will update the slide when we post them out on the site to address that.
Fantastic. Another question in here says, he stopped taking admissions upon first COVID-19 case identified and continued to decline admissions while outbreak increased. Can we qualify for lost revenue? Census dropped from 72 to 48.
Yes, so that is definitely an example of what the funds are intended to cover. So the drop in census times your average rate is, for those types of patients is the lost revenue that would be computed back on our slide, to be the equivalent of that 300,000 that we were talking about when we went through that slide.
Excellent, thank you. Those are the only questions that are in right now.
Betsy,
Okay.
Pat, just a quick thing on occupancy and lost revenue. Folks really pay attention to that because overall in the state, we saw about a 14% drop in revenue from January, February, March to April in that. And we know May probably dropped again. Across the nation, they're reporting at least 10% drop in revenue. So the lost revenue, or you may see it be labeled business interruption, all of that is greatly impacting it, and that's what some of that stimulus funds are for. As Betsy showed you the examples, and there's a lot of, have to wait to see what's going to happen on it, but do keep track of it.
Yeah, and I think also I mentioned it briefly, but I think it's a good time to mention it again, which is the Part B revenue. So most of you probably experienced a reduction in the Part B revenues as well. Probably didn't have residents going for Part B therapy, practicing, social distancing, et cetera, and for a variety of other reasons. So, make sure that you contemplate a reduction in your Part B revenue in the lost revenue as well. Okay, so Yep, and I see that question, Mary. Yeah. I can see that question on the 85% occupancy, and we're going to get to that in just a minute.
Perfect. Sounds good.
Okay, thank you. So, moving to the slide on Medicaid reimbursement. It's the colorful one, Mary. Okay. So, this slide is a recap of the various aspects of our Michigan Medicaid reimbursement. And, you know, as we look at this slide, if we think about how we get paid in our facilities today, most of our facilities, we have our regular Medicaid rates. Some of you have vent units. And also, our Medicaid program pays for coinsurance on our Medicare stays where the individual has Medicaid coverage. So those are the three basic types of payments that we have within our Medicaid program. And underneath our regular rate, you know we have our variable costs, we have our capital costs, and then we have our two provider tax programs. Our original program, which we called our quality assurance program, and then our second program, our quality measure incentive program. So as we think about where we are today as an industry and what the future holds, kind of hard to even remember a time, you know, before the pandemic. But if we do, as you recall, you know, we were already looking at some pretty significant challenges with our state budget. And we have actually had to face challenges associated with potential reductions in the VCL a couple of times over the last couple of years. So right before the pandemic, when Governor Whitmer, you know, started to talk about her budget for the next fiscal year, the one that will start on 10/1/20, she was already talking about wanting to move to a new reimbursement system, and in the process of doing that, potentially taking $84 million out of our funding. So, you know, prior to everything that's happened, we know that we have faced a lot of threats and a lot of challenges to our current reimbursement system. One of the things that was also happening that was potentially going to be an issue with our Medicaid reimbursement system, and you may recall, the federal government had issued something called MFAR. And right now, I can't even remember what that stands for, but it was a program designed to really, or legislation, I should say, designed to take a look at how states were using mechanisms like provider tax to bring federal funds into the state. So we were a little bit concerned with our provider tax program as having been identified by ACA as maybe needing some tweaking under the tenets of this MFAR. And we had our governor looking to create savings for the state by cutting our rates. So that was pretty daunting. And now we add to that a situation where we've had such significant challenges on occupancy associated with the pandemic and significant changes in our costs. So what is this going to look like for us for reimbursement rates? Well, we don't have a lot of answers, but we have some that I think might be able to alleviate some concerns. So Mary, if you can go to the next slide. So as you know, we set our rates every October 1 based upon the cost report from the previous year. So 10/1 of 20, your provider cost report ending in 19 will set that rate. So our rates on 10/1 of 20 are going to be based on 2019 cost report. So during 2019, we didn't have a pandemic. So we have for this year normal rate setting. For those of you who are calendar year-end providers, you would have just submitted your cost reports. There was a bit of an extension allowing providers to file those in June. The providers, the state is processing all those cost reports that they've received. Pat and I are going to be monitoring it very closely to see what's going to happen to the VCL and the CAV limit. I'll talk about that more in a minute. But essentially for 10/1 of 20, that rate is going to be set based upon 19, which is really normal rate setting. Now, it's normal rate setting, but we really don't know, how the state may be viewing all of the budgetary issues that have been challenging the state as a result of revenues being down from the state being closed for so long. So it's normal rate setting, but we still have the concerns and challenges that relate to the status of our state economy. And we'll come back to that in a moment. So then looking forward, as all of you operate in 2020, normally the 2020 cost report would be used to set the 10/1/21 rate. And a very real challenge and a very real concern for all of you has been, oh my gosh, what are we going to do about 85% occupancy? Some of you have intentionally closed admissions related to the pandemic. There's been a variety of reasons why your occupancy has fluctuated, a decline in elective procedures at hospitals, unwillingness of families to want to admit loved ones. There's just a myriad of reasons. And so in normal circumstances, you would try to manage your 85% occupancy by either establishing non-available bed plans or by potentially decertifying some of your beds for Medicaid and establishing Medicare only or licensed only units. So that is a very big challenge. So I'm happy to report that in response to concerns with that and another provision, which we'll talk about in a minute, we have gotten acknowledgement from Medicaid and from the state budget office that the 2020 cost reports are not going to be used for the regular rate setting for 10/1 of 21. Therefore, you don't need to worry about taking steps to manage 85% occupancy for that regular reimbursement rate. A second and equally as important issue that drove the interest in having DHS and the state budget office agree to that is concern over how the stimulus funds would be treated. So you're receiving federal stimulus funds. Maybe you received a payroll protection loan that ultimately gets forgiven. Maybe we get some other special state Medicaid reimbursement. We were concerned that if all of those special revenue sources that you're receiving this year had to be offset against this year's allowable expenses, that would have a significant negative impact on next year's rate. So significant challenges, the state's unwillingness to talk about how that might get done, All of those resulted in advocating to not use the 2020 cost reports for regular rate setting, which is where we have landed today. Now, having said that, there are still some details that have not been finalized that we continue to work through with the state. One very important one being a continued opportunity to plant cost certify if you have made capital investments in your building that would not be covered by extending the 19 cost report. The second area that we have not finalized the details on and continue to seek input from providers on is what to do about the special vent rates that many of you have and whether a different approach should be applied to that. So I'm going to pause there. I think there are some questions in the queue, and I think, Pat, you may want to chime in on a few points as well.
Yeah, thanks, Betsy. Yeah, one thing to chime in on, HCAM has asked the Medicaid program to give something to the providers in writing, telling them that the 2020 cost reports will not be used. Folks are hesitant, and I don't blame you. It sets your rates. But we are requesting that from the department, and we will keep pushing until we get something out. They are, like Betsy said, the state budget office and the Medicaid, represented by Farrah Hanley, senior director within Department of DHHS, have all agreed to us, and we have that email in writing. So that's good, but we need notice to everyone. So we'll let that go forward. And if you got more questions on what we're thinking of for the future, or you have comments, please get them back to me, get them back to Betsy. We'll circle back and take care of them and get answers out. Or if there's questions we need to bring up to the state on issues, please give it back to us. You ready, Betsy?
Yep. Now, having said that, so even though the cost report won't get used for regular rate setting, we are still, and you're going to hear more about this, we are still advocating for Medicaid funding of COVID-related costs matching up to the time frame of the pandemic, right? So you're receiving these federal stimulus funds, but we still believe there is a shortfall that I'm going to have the HCAM team talk about on a later slide. There still is a shortfall that we need to close the gap on. So it is likely that you're still going to need to account for spending, and we'll have some sort of cost reporting for some of this Medicaid state funding that may be coming, but we don't anticipate the regular cost report being used for the rate. So what I want to make sure is that you don't walk away with the thought that there won't ever be any accounting to the state on 20 costs. We do think if we get the state to cover COVID expenditures, we'd still need some sort of a reporting for that. And maybe there's an opportunity, because it would be efficient for the state to piggyback on whatever the feds come out with. So we've been hesitant to, in our discussions about funding, get too far into a path of how we would report, because we're waiting to see how some of this may play out at the federal level. So now let's keep going and play out, how this might look for you operating facilities. So on 10/1 of 20, you're going to get your rates that you're normally going to get, which still may not be enough if we're still in the throes of the pandemic. So we might have special funding. Then we get out to 10/1 of 21, and we're going to continue to use that 19 cost report. Here, this isn't really finalized yet either, but we have been in discussions with the department about what is an appropriate inflation rate if we continue to use 10-1 of 19. So, but again, at 10-1 of 21, we'd be using the 19 cost report. So then the question is, what happens when we get out to 10-1 of 22, which normally would be set with the 21 cost report? Well, as you recall, prior to the pandemic, we had already started a process and a work group within HCAM to discuss what might make sense for a new reimbursement system. We had a number of meetings. We started to do a lot of analysis of provider costs. We looked at how the state might view a transition to PDPM, you know, and we were making very good progress as a group on starting to analyze what might make sense for all of you. So it is reasonable and very likely that, you know, the state will not forget about that, and that this transition that's happening as a result of COVID, resulting in the use of a cost report for 2 straight years, could potentially carve a path where we ultimately don't use the 21 cost report for rate setting, and by the time we get out to 10-1 of 22, we would actually be prepared to go to a new reimbursement system. Now, obviously, it's very hard for most of us to think about 2 years and 4 months from now when we're in this survival mode of today. But I think what this does is it really sets up the opportunity as you recover from the pandemic to think about a potential reimbursement system, a life after COVID and after cost-based reimbursement, as you think about, you know, retooling your operations and things that you may do differently in response to what you experienced during the pandemic. So on the next slide, you know, we really highlight and summarize these things that I've talked about, that in the short term, you know, we're going to be using the 19 cost reports really to set rates for 2 years. That's being finalized. That does help with your bed management. And, you know, just one additional note on the bed management. It has become increasingly difficult, as all of you are aware, to get beds back Medicaid certified once you have decertified them as a means of managing the 85% occupancy. They've really tightened up the requirements on that. So we think it's very favorable that you're not going to have to shrink your units because of COVID and then potentially have challenges to get those beds recertified when census has fully recovered. So in the short term, we're going to continue to use 19 cost reports, and we're going to be aggressively advocating to have some funding for COVID-related expenses. In the mid-range, we don't really know if the 2021 cost reports will be utilized to set rates. It's likely we'll continue to have challenges in our state once we've recovered. And long-term, you know, we do know that it was the state's intention to move to a new reimbursement system, and that we believe that if we have a very strong voice and participation in how that is crafted by working together with the state, we can come up with a system that works rather than having the state head down a path, you know, to push a managed care structure. So with that, you know, we'll continue to keep you posted. On the next couple of slides, you know, we've summarized some of the VCL rates and inflation factors that currently exist. We don't know what these will look like starting on 10-1 of 20, I think if we looked at historical rate drivers, the VCL has moved about 2 to 3% annually. The current CAV limit is $92,500 per bed. That has been moving based upon all the renovations and new constructions that many of our facilities and owners across the state have been engaged in. That's continued to move that CAV limit by 5 to 7% each year as well. On the next slide, we really don't know what will happen with provider taxes. These are this year's tax rates. When we think about this year as part of our advocacy for special Medicaid funding, we know that Medicaid census is dropping. Even though the state, continues to assert that they haven't really seen that yet, I think once the May claims have been processed, there was some reduction noticed with April claims. They're going to see the significant reduction in Medicaid claims as a result of census reductions and shifts in skilling of residents. So that decline in census days, along with the provider tax revenues that have been collected that were intended to fund at a certain level of Medicaid utilization, there is some gap there that we're continuing to talk about to the state, along with funds that the state has received through legislation, and trying to tap into those funds to be redistributed to you. And Pat and Melissa and Richie are going to give an update on that in just a couple of slides. But before we do that, just a couple more items on Medicaid reimbursement. The Medicaid audit, the audit department was pretty cooperative in postponing and delaying and slowing down the Medicaid audit process. They're working remotely, but they have indicated that they are ramping back up. So many of those audits are resuming. Frankly, they were also, I would say, pretty accommodating around trying to slow down that audit process because folks were, of course, busy with the pandemic and busy getting information related to submitting cost reports, and they wanted to make sure that that was getting done. But, things continue to be aggressive, I will say, on the cost report audit front, with the state looking to claw back a fair amount of funds. We've seen providers have, significant audit adjustments, and we do anticipate that continuing, which really creates another opportunity for providers to take a fresh look at moving away from a cost-based reimbursement system and avoiding the uncertainty that comes with having an audit after the fact and having to fight potential clawbacks. In closing, on my comments before I turn it back over to Pat, she's going to talk about the CMP grants. I guess I would just reinforce that investments in physical plants are going to continue to be very important to financial results, regardless of the reimbursement system. So temporarily, we're going to contemplate a mechanism that even if our cost report is used more than once, you would have an opportunity to plant cost certify for any investments you make in physical plants. Under a new reimbursement system, it's likely we would adopt the fair value approach used by most states which really takes a look at a bricks and mortar type appraisal for a building and uses that value to drive capital reimbursement. So even under a new system, making investments in physical plant should be returned to you in a reimbursement rate. And I think the pandemic has exposed lots of reasons why being able to shift to private rooms and have other accommodations for infection control and social distancing within facilities may be very important to consumer and family choice in the future. I did see a question come through on COVID-related expenses related to physical plants. In the FAQs that were issued, they specifically addressed temporary modifications with the stimulus grants. They did not address permanent modifications. So I would say, you know, if you've made things that were temporary, those likely would be covered and count when we get the final guidance. But you know, permanent physical renovations may not be covered. So Pat, if you want to address the CMP grants, and then I'll turn it over to you on the next slide.
Yeah, we also have a couple things in the chat box, but let you take a look at those and I'll talk about the CMP grants. The Civil Monetary Program, there's grants, the money that the state has, there was something like $20 million. The state of Michigan requested from the federal government to be able to use some of those funds to create, to give to facilities to be able to buy iPads and be able to have residents be able to talk to their family members easier. There's an application process. We'll put it out in the update that goes out today from HCAM, so you can do it again. What we know right now, 190 facilities have gotten the CMP grants. You can order like an iPad, you can order the protection for it, the cover for it. You know, they're not really restricting that type of iPad or anything. You can get it with the Wi-Fi, how many gigabytes you want for it. You can do that, but it's an opportunity and there's still money available. The deadline was June 30th, as it says here. We got an email yesterday stating that the state is going to extend that deadline. They would like to be able to get the money out and during this pandemic time be able to connect families with their loved ones in the facility. We will know later this week what that deadline is extended to, but go ahead, get your applications in. And like I said, 190 facilities already got that money. So we'll go from that. You want to answer the couple questions in the chat box? Betsy, I know one was on the hubs and one was on the non-available bed plans.
Yeah, maybe you could answer the hub cost report.
Sure. The hub cost report, there is limited information out on what they have to file, those that are hubs. There's 29 hubs around the state of Michigan, primarily in the lower part, southeast Michigan. There's some over on the west side of the state now where there's been more hot spots of COVID. There is one up in Traverse City, in Grand Traverse County in that. They are having a short report that is due from when they became a hub, which is the date the Medicaid director signed the letter saying, here's your participation agreements, here's what you need to do, you became a hub, and then when the hub ceases, or by 9/30 of this year. Some hubs are winding down because they don't have as many COVID cases, they don't need that many beds anymore. There's a provision to be able to do that. Right now, the hub cost reports, they're saying that they are a reporting mechanism. They are subject to audit if it is requested. The question becomes, will they cost settle the hub cost against those costs? That has not been clear. I'm not sure that will happen. Why I say that is the hubs are now also receiving $200 per occupied bed. It doesn't matter which payer source, so it's for Medicare, Medicaid, whatever the payer source. per resident during the stay in the hub. And that began, it goes retroactive back to when they became a hub, and they have to file that information. They can file every 2 weeks and get paid for that. So the question on exactly how the hub cost reports are going to be used, it's another one of those questions that we'll have to wait for the answer, and HCAM will advocate that they just be used for reporting to justify. We'll talk a little bit later some of the legislative activity, and you'll hear a little bit more that what's happening in the legislature around the hubs and that.
So the other question then was the non-available bed plans. Great question. So as many of you recall, if you had Medicare-only units or had non-available bed plans, you could use those to respond to the pandemic, to spread out and use those beds. So for the Medicare-only beds, it's simple that they are Medicare-only beds and you used them, but there's really no change to the designation as a result of using them. For the non-available bed plans, it's a little more complicated because the department has indicated that once you notify the department that you've used the non-available bed, that the non-available bed plan is negated as of that day. Well, while you're in calendar 20, if we're not going to use the 20 cost report to set reimbursement for 10/1 of 21, it's really okay to have the non-available bed negated, the non-available bed plan. But if you had a plan that you wanted to then resume for 21, we do need the department to say that they're going to allow those non-available bed plans to be resumed on 1/1 of 21, or to have some way to account for that. Because as many of you are aware, there are so many times that you can, there's a limited amount of time for which you can have a non-available bed plan, and then there is a 2-year wait period to be able to restart it. So there could potentially be a situation where, having negated the plan, now you're out of luck and can't resume it on 1/1 of 21, which wouldn't have been the intention. So it is something that we've raised with them, but do not have a definitive answer at this time.
Thanks, Betsy. Yes, and HCAM is still working on getting that answer. And I know there's been some letters that have gone out for providers regarding the non-available bed plans, so we will push that forward. Let's turn our attention to the slide that Mary has up on the Michigan budget status. And Richie Ferran is going to, and Melissa Samuel are going to talk about that. So I'll turn it over to Richie.
Yes, thank you, Pat. I'll touch base on budget as well as legislative activity here in Lansing. Betsy touched on it a little bit. Obviously, the state's response to COVID-19 left a significant shortfall in the state budget for the current fiscal year, where there's only a handful of months left here. Next fiscal year, and even the following fiscal year, they're projecting we'll see some impact from the shutdown. The Senate and House fiscal agencies, along with the Department of Treasury, held their revenue estimating conference back in May. They cited that revenues, really was mostly income and sales tax, had decreased to levels that they hadn't really seen since 1946. So that shows you just how significant the decrease in revenues that the state is currently facing. So it's a $3.2 billion shortfall in the current fiscal year, a $3.1 billion shortfall in the state budget for the 2020-2021 fiscal year. So obviously that creates tremendous amount of difficulties for the state. The current fiscal year ends September 30, so they have to essentially make up $3.2 billion here in the next couple of months. Governor Whitmer and her administration has really been calling upon the feds to send help. The state did receive about $3 billion and CARES Act funds. These were allocated specifically for COVID-19 response and could not be used to backfill lost revenues in the state. So basically, Governor Whitmer and many other states are calling for Congress and President Trump to send more funding in a subsequent stimulus package to states to help them fill the budget shortfall. The information from ACA is another stimulus bill likely isn't going to happen until after the 4th of July holidays, so we're looking in July, and then it takes a minute for money to get down to the states. So there's some risk there on waiting. It's going to cause some pains there for reconciling the current year state budget. So basically where we're at now is it's almost like there's three budget processes going on at once. We have the $3 billion in CARES dollars that need to be allocated. We have the reconciliation of the current fiscal year budget, the $3.2 billion hole, and then what would normally be going on and under normal circumstances is negotiations and talks around the 2020-21 budget. So there's going to be another revenue estimating conference in August. You know, a lot of this is projections. I think we, Pat, Scott, and Betsy have done it too. We don't know what the next few months will really look like. So when we're predicting our costs, you know, there's a lot of unknowns and it is an estimate. It's the same way for the state. So it's a little unprecedented here. They don't usually hold another estimating conference, but they're going to do another one in August to really nail down what this deficit will look like, which likely means that a lot of this stuff, you know, the current year budget and next year's budget, we might still be waiting on what those all will actually look like. It's going to be difficult. I think Budget Director Kolb uses this line. He could cut 12 state departments and still not come up with the $3 billion to fill that hole. So really, anybody and everybody is on the chopping block here, and Budget Director Kolb and even the legislators have said as much. Now, many of you are probably aware that the profession has been in the spotlight here over the past couple months. A third of the COVID deaths in Michigan are nursing facility residents. It's even higher in other states. The national average is even higher. You know, it's been really terrible what the professions had to go through. That being said, it's, you know, it's a position where politically, when nursing facilities are on the front line, how do you cut their funding? So that's kind of the message that we are sending. We need more help now more than ever we need help. So not only are we advocating against any cuts in the reconciliation of the current year budget and for next year's budget, we're also, that $3 billion in CARES Act funds that were sent to the state, we are advocating that the COVID costs that Michigan nursing facilities have incurred, that those be recognized partially in using those CARES Act dollars that were sent to the state. So that's the advocacy that HCAM is doing around the budget. And that's going to be an ongoing process, obviously, over the next couple of months. So that's where the budget process currently stands. Pat, did you just want to touch real quick on the April 2nd?
Just a quick reminder for everybody. The Medicaid paid some funds out to everybody on April 2nd, but this will become part of your settlement process for this year. Most of you, that would be the 2020 year that we're talking about. So don't forget that what they paid then, that you'll see that as part of your settlement process. And that was dollars that the state Medicaid program used to help fund and get some cash out to folks. Also, what the state Medicaid program did is we had requested is to delay the provider tax bills each month. They delayed the March bill, the April bill, the May bill, and I think we're now just on a 2-week delay, and they'll probably be back caught up again by the end of July. But that was all done to be able to help with the cash flow in the facilities because the federal money hadn't started flowing yet, so that was all helpful. We'll go to the next slide and go over some of the
Pat?
legislative activity. Oh, go ahead, Betsy.
Yeah, if I could just ask a question, because I wasn't clear to me, and maybe somebody else is having a question. When you say settle it with 20, do you mean, so even though the 20 cost reports won't get used for rate setting, let's say, we're expecting they'll still get filed and submitted next May, or other dates depending upon when you file. So will this settlement of this cash advance not occur until after 20 cost reports are filed? So then if you're a 4/30 year end, you're going to file them in September, and then it'll happen after that. Do we know?
No, they just said it would be part of the settlement. I'm assuming because of it got paid April 2nd, it would go with your cost reporting year end that follows from that. But they haven't really addressed it much since they gave it out, except that it would be part of, like, an extra payment during your settlement process. Because, yeah, like the cost reports maybe are not going to be used for rate setting, but they still have to do a overall settlement in looking at the rate they paid you compared to the rate you got paid and the rate they were supposed to pay you, because we know the changes happen. Things pick up and don't go in the system on time and that. So there still is going to be a settlement process to all of that.
So, right,
help?
so if you're it does. So if you're a calendar year provider, they're probably not going to take this money back until late in 21, if I had to guess. So make sure that it's accounted for as a liability on your balance sheet so that it's not forgotten, because you will have to pay it back, but it's going to be sometime from now.
Thank you. We'll move on to legislative activity. Or there was one question about the CMP grants that we got on available for adult foster homes. That is not available to them. The CMP fund is penalty money that nursing facilities have paid based on enforcement actions, and that money is then put back to the state to use for nursing facility residents only. So unfortunately, that's the only group that can get that. Legislative activity, we'll let, Richie's on a roll, we'll let him keep going.
Yeah, we'll start with Senate Bill 690. So we talked a little bit about the federal stimulus, the CARES Act dollars that were sent to the state. This was kind of the legislature's first allocation of some of those dollars, about $800 million in total in the bill. Included in the bill, which was passed last week, was a $2 per hour wage increase for direct care workers employed at skilled nursing facilities. The $2 an hour wage increase would apply to employees who, those employees who were employed at the time of the bill's enactment, which really should be any day now. The governor had issued actually a press release praising the legislature in passing this bill. So it's expected that she will sign it and it'll go into immediate effect. And the pay increase is for July 1st through the end of the fiscal year, which is September 30th of 2020. Essentially, I think what the intention here is to do something that looks like a wage pass-through that's been used in years past. When the bill's signed, we'll be sure to have the conversations with MDHHS on the mechanism and how this will be paid out. Included in that $2 an hour wage increase is the expense that the employer would incur for payroll taxes and other expenses that come with a wage increase for employees. And the bill defines a direct care worker as a RN, LPN, a CNA, and then also a respiratory therapist. Also included in the bill is $25 million for a grant program for PPE and testing that would be available to a list of providers, including nursing facilities and the language is used, residential congregant facilities. So it's been interpreted that for AL settings as well. So we will, again, this is going to be administered through MDHHS. HCAM will be communicating with NDHHS on the mechanics of how this grant program will work, and we'll be providing information as those details are developed. Do you have any questions on 690, Pat, or?
Yeah, there's a question. Would the wage increase need to be included in the weighted overtime calculation? Yeah.
Yeah, so go ahead, Pat.
No, yeah, it would be. It's a wage increase that they want for the $2 per hour. So yeah, it would be part of your overtime calculation in that.
Mm-hmm. So Pat, I think our understanding, and based on how it's worked in previous wage pass-throughs, it would apply to the hours, a paid hour for the employee, correct?
Yeah.
Okay.
Yes. So you can't shake your head when you're on the phone. You know?
Okay.
Yep.
All right, we'll move on to Senate Bills 956 and 972. So Pat alluded to the fact that the Regional Hub program has been under the microscope here in Lansing from the legislature. You know, I think that's understandable given the impact that COVID has had on nursing facility residents and staff. So there were questions about whether it was the appropriate public policy or not to have the hospital discharge COVID-19 patients into nursing facilities. Obviously, what had resulted from that pressure to address the hospital capacity concerns in late March and early to mid-April was to establish these regional hubs, and 21 nursing facilities have been established as regional hubs that would receive some state support, some financial support, some PPE support to accept COVID patients from the hospital setting, and as well as from other nursing facilities that were not able to care for those residents. That, like I said, has been under a fair amount of scrutiny from the legislature over the past month or so, and that has culminated in Senator Lucido introducing Senate Bill 956 that would prohibit nursing facilities from accepting patients being discharged from another healthcare facility if they were COVID-19 positive, out of concern of the other residents in the facility. That bill was just reported out of Senate Health Policy this morning. It's on the agenda on the Senate floor today. It'll likely be sent to the House this week. There's some pushback from some Democrat senators on the bill. It's taken a little bit of new language this morning. It's requiring some reporting by the department to the legislature on the efficacy and outcomes of the Regional Hub program. I think what we've seen from the department, the numbers the department's provided, is the Regional Hub programs have actually, the Regional Hubs have actually had some very good outcomes, better than the national average, better than the state average. So I think it might actually be a blessing for us to see a report on the Regional Hubs. But the department is now exploring some dedicated COVID units, what that would look like if a second wave were to come this fall, which many do anticipate. So they're starting to explore what something other than a Regional Hub program could look like, and those conversations will be ongoing. HCAM will be a part of those as this bill moves. And this is Senate's the first chamber. It's got to go through the House and hearings in the House as well. So we'll continue to keep an eye on that and on where the department thinks they're headed in terms of dedicated COVID units. The department has to have some type of plan on dedicated COVID units to the legislature by the end of August under this bill. So I think some of those conversations, again, have already started within NDHHS. Senator Lucido also introduced Senate Bill 972, which prohibited AFCs from accepting COVID-19 patients. So a lot of this is arising out of concerns they've heard from constituents. Some of it's about, the issue of visitation has really started to become a little more prevalent. Family members, it's been a couple months now here, understandably, they would like to visit with loved ones. So our conversations with policymakers is reconciling, keeping residents safe, with opening them up to family members being able to visit. Kathy Sunland here in our office has been working closely with, and Linda Loeffler as well, have been working on the work groups that are exploring reopening. So all of that is connected here. It's all kind of pushing and pulling on where policy is going, on where these bills are going. So we're engaging and advocating for the profession throughout this process. Continuing to Senate Resolution 125, there was also a House Resolution 276. The conversation around the governor's COVID-19 policy with nursing facilities has candidly become pretty political in Michigan. The House and the Senate both passed resolutions condemning the Governor Whitmer's executive order 2020-50 and kind of subsequent executive orders that came after that, and placing COVID patients in facilities. So that provides some context of where the legislature's coming from and where our advocacy efforts are coming from. So those were passed last week. They're not law, they're not binding. It's more of a statement from the legislature of where they stand. So that's where the other Senate bills are moving in that context. So, and then we'll move on to Senate Bill 77. That's begun to move here in, again, the COVID context. That was a bill that would require nursing facilities to allow cameras in residents' rooms at the request of a resident or a resident representative. This was something that HCAM was engaged on and was really fighting against in the name of resident rights, privacy, and dignity. Last year, and this has been brought up over a number of years, it has begun to move over the past couple of weeks, and I think our current climate, the discussion around nursing homes and the COVID-19 policy in nursing facilities has really driven this thing forward. It was reported out of the Senate Health Policy Committee last week. It is now awaiting a vote on the Senate floor. I actually have a conversation with the bill sponsor and Senate staff later this afternoon on the bill. To be completely candid, because of the climate we're in, this is as good a time as any for this thing to move. So we are working on language that would make it as palatable for us, as beneficial, at best for facilities as we can get, given the circumstances. So that's ongoing conversations that we will have here over the next weeks and months on Senate Bill 77.
Thanks, Richie. We're going to go back. We have about 4 questions on the wage pass-through. First one says, my company is saying we do not apply for the $2 wage increase. Are there SNFs that this would not pertain to? And where does it explain who is required to participate?
So the language in the bill it is for direct care workers employed by skilled nursing facilities. So the plain reading of the bill, every skilled nursing facility this would apply to. So it's the legislature and the governor allocating some of these CARES Act dollars for direct care workers employed by skilled nursing facilities. So CNAs, RNs, LPNs, and respiratory therapists that are employed at the time of the enactment of the bill would be recipients of the $2 an hour wage increase.
And the wage increase goes from July 1st through the end of September.
Yeah, this is Melissa. Let me add a couple things here, because I know there's many of our members that are kind of questioning this. and maybe where it came from. So I just want everyone to know that this was not an HCAM initiative. As has been stated throughout the webinar, we have been advocating for reimbursement of your expenses that have already been occurred. Many of you did give wage increases, early on in our process with the pandemic, and would not at this point be in the mind frame to give wage increases now. So this is essentially a Democrat initiative, and more pointedly, this is a union initiative, and this is just how sometimes things unfold here under divided government. With obviously we have a Democrat governor, and her relationship with the unions. So this is where it came from. That's the background on it. I think it's important everybody knows that our focus has been on getting funding for your cost already incurred on a state and federal level. That's where the advocacy has been. But this didn't come from HCAM. So I just want everybody to have that background.
Thanks, Melissa.
Yeah.
We had another question in here about that. It says, so the state will reimburse us $3 per hour for the overtime. Now, we're saying that the $2 applies when you have someone in paying overtime, but no, the state will only pay $2 per hour plus your related employee expenses, your payroll taxes in essence, for that money, but up to only the $2 per hour. The other question is, is the $2 official? Yep, is the $2 official? We're waiting for the governor to sign the bill.
As soon as she signs it.
Yeah, we expect her to sign this legislation.
Yep. And, we answered this. Registration hasn't been signed yet. And the other question, where'd it go?
Do we need to?
Do we have to, how do we get reimbursed for it? You have to apply for it, you get reimbursed for it. Now you give it, the mechanism to get paid for that, we are in discussions with the Medicaid program. To do this all went rather quickly, so they have not said that out. Richie mentioned before, those who have been around for a long time, remember the old wage pass-through forms, which are part of your cost report today. That may be the mechanism that they will do that with, but we don't have a defined answer right now. And we will keep you posted as soon as we can. We'll try to make the mechanism as simple as possible. But we'll see, hopefully we'll use some of the forms we had in the past. I think we've got all the questions on that.
There's one more on that.
There's another one?
Actually, two more questions. One is, we give the $2 increase for 3 months and then take it back. Is it required?
Yeah, it's supposed to be for all staff that are of those categories employed by skilled nursing facilities are expected to pay that.
Okay, I got a couple more.
Okay, one was it's for skilled nursing facilities, not AFC. Correct. It's just for skilled nursing facilities.
Do you want to touch on the CMP?
Yeah, the one question about the CMP grants, email me separate and we can check with the gentleman that is making those payments. I have the record of what's been paid out so far. So just send it to patanderson@hcam.org and I will get that answered. And if anybody else has other questions on the CMP grants, send it to me and I'll take care of that. Let's see. So what about unit managers, DONs, MDS coordinators who are RN, LPN, CNAs? Yeah, anybody who's a RN, LPN, or CNA. All of those people and the respiratory therapists are entitled, respiratory therapists employed by the facility. Remember, these are not contract staff. I need that specific so that it would be only the employed staff at your facility would be entitled to the wage increase. So it would apply to those staff, whatever function they do at the facility, but they're all there. I think we covered all the questions. Another one?
Nope, they keep popping up. So, question about, do hospital direct care staff get the $2 also? So in an instance where there's a SNF attached to a hospital, that might create some issues.
Yeah, good question. That could create issues. It is only for the skilled portion of the facility. It is not extended to the hospital staff. Another one, it says that administration staff are included as long as they're RNs, LPNs, CNAs, or respiratory therapists. Yes. And another one, it makes it very difficult to understand because the governor group skilled nursing facilities in with AFC HFA, thank you. Yeah, sometimes the governor will say all long-term care facilities, which includes both the skilled, the HFAs, the AFCs, and that, yet a lot of this funding is only available to the skilled nursing, primarily probably because it's Medicaid matchable and they can get the match from the feds.
I think this is Melissa again, I think this is more of a union nature, and that's why it's for nursing facilities.
And the $2 an hour, the provision of the bill specifically says skilled nursing facility.
Yes, it doesn't say any others. So even though sometimes we've noticed that the governor kind of interchanges the words on us, it is only for skilled nursing.
So,
okay, leadership at a corporate level versus at the facility level. It probably is only those at the facility level, like in the wage pass-throughs of the past, it was the direct care workers. So an RN who is a consultant wouldn't probably be entitled to that.
and it moves between more than one building.
Yeah, consultants that, RN consultants that move between buildings and that are on the corporate books. If it's a corporate nurse that goes only to a particular building and no other, that would be different. But it's really for the staff at the facility doing the care there. All right, I think we got them all now. We're checking to make sure.
I think we're good.
We're good. If you got it later, just put it in the box. If we don't answer it live, we'll be able to do a few FAQs and we'll put it out in a couple days. Moving on to reporting requirements. And Kathy Sunland's going to join us on the reporting requirements of what needs to be done. Thanks, Kathy.
Yep, thank you, Pat. Hello, all. Well, everybody should be well-versed now in our reporting requirements. And that includes the information reported through Michigan's EM resource database or portal, as well as the NHSN CMS portal. For Michigan, those providers that chose to do so can have their data that they are reporting in EM resource flow directly over into NHSN so that they have to report only once. Others that chose to report separately can do that as well. Just a couple things I want to share with you on the reporting requirements. First, throughout the course of all of this, we've been sharing the barriers with MDHHS and working with them to try and smooth out some of the kinks. I know many people had difficulties getting set up initially, and in particular with the NHSN. And most recently, there's been difficulty or a lapse, so to speak, in the NHSN side with data being pulled over to CMS for reporting. So some of you may have received an automated citation in a letter for F884, which is failure to report within that national reporting system. CMS, in discussions with ACA and leaders at MDHHS and CMS, they did share that those citations are solely automated. So they are simply coming out of the system. The system just spits them out. So if the data doesn't drop into the right spot, the system is automatically generating a citation for F884 and sending out a 2567 with template language in it. So many of you may have received that, particularly with the issues they were having with the data pulling over from NHSN. If you have received that, CMS's guidance at this point is to file an IIDR. I can also tell you that some facilities have received letters from CMS rescinding those citations. So they do recognize that those citations were issued in error and they are trying to make it right. But if you have received one of those, make sure you are submitting an IIDR. We sent information out previously, I want to say a week to 2 weeks ago, about how and where to send that information, and I can send that again and put it in the update for anybody that needs that. Now, the other thing I want to make sure everybody's aware of is that NHSN data is being shared with CMS, and they are now publicly reporting that. There's a database that shows all the numbers, so it gives where you're talking about cases and deaths and residents and staff, et cetera. All of those numbers are in a CMS database that's now publicly reported. Want to make sure you guys are watching your data and making sure it's correct. The other piece I want to make sure that everyone is aware of is that the 2567s are being reported through Nursing Home Compare. So if you go to Nursing Home Compare, there is a spot where you can click and download all of these 2567s by region. And a point of caution, they have simply pulled every 2567 from March 1st forward. So, for instance, here in Michigan, we really didn't have COVID surveys starting until late in March. So anybody who had a complaint survey or any kind of FRI annual, all of those 2567s from March 1st on are included in that Nursing Home Compare database now. So just be aware of that. Let's see, questions on reporting. Don't see any at the moment. We have one going back to, do we want to do that before we move forward to testing?
On the direct care worker, the $2, the question becomes is, prior to the $2 we've been talking about recently in the bill, that is waiting the governor's signature, there was a $2 wage increase offered to behavioral health programs, the Medicaid My Choice waiver program, and those individuals. It did not extend into the skilled nursing facilities, and there was a lot of confusion around that as this other came about. That program was supposed to end the end of June. With this legislation that is just being signed, it would extend that program to September, but that did not apply to skilled nursing and AFC. It applied to the My Choice waiver, and if you're a My Choice waiver facility and helping with that, there's some money coming through on that. I think that's it on questions.
Okay. All right, thank you, Pat. I'm going to go ahead and move on.
Yeah, keep going because we're running out of time quickly.
So I'm going to move on to testing. MDHHS recently issued an epidemiological order requiring baseline testing and ongoing testing within skilled nursing facilities. And when I say testing, I mean COVID testing. So first and foremost, every facility is expected to obtain a baseline testing for all residents and all staff. The order also stipulated that an initial round of staff testing must also be completed by July 3rd. For those individuals who had not completed a baseline prior to the June 15th release of this order, so if you are doing your baseline staff testing between June 15th and 7/3, July 3rd, it will still count as both your baseline and your initial staff round of testing. Beyond the July 3rd date, the expectation is that if you are in a low-risk area, you do not need to continue any weekly testing of staff. We have heard from MDHHS that they are expecting that the remainder of the state, or at least the majority of the remainder of the state, will be moved to low risk sometime before that July 4th weekend. We are still waiting and watching for that, but that's what we've been told. So I anticipate that for the majority of facilities, once you've completed this first round of testing, you will not need to continue testing unless you have new symptomatic cases or new positive COVID confirmed individuals, either residents or staff. MDHHS has also been sharing all along with us that it is their intent to fund the cost of this testing. However, as of right now, there still is not a process or a final plan that's been released. I know there's been a lot of discussion, including over the weekend. Melissa's been involved in a number of conversations back and forth, as well as the rest of our team, on how to reimburse and fund these tests. And so that should be coming out. We anticipate additional information here very, very shortly, and we'll share that as soon as possible. They do recommend for residents, if all possible, bill Medicare, Medicaid. If for employees, if possible, bill commercial insurances. We have shared a number of barriers, including the use of commercial insurance as a funding source, capacity across the state to manage the load of testing, timing of the order with the July 3rd date, as well as the impact that this potentially has upon staffing. In light of time, I'm going to see if there's any questions.
We've had a few more questions on the wage pass-through. One was, do Medicare-only facilities qualify for the $2 per hour? I think I mentioned Medicaid, so everybody's thinking it's just Medicaid and that, and they'll do it. The Medicaid program will probably be the ones that handle it because they have the audit staff to handle that process, and they can be able to do that. Now, if you're a Medicare-only facility, our reading is that you are entitled to the $2 per hour. The question will be how you get paid. You have an MPI if you're a MPI number. So if you're Medicare, so I think they will go that way, but we will point that out to the Medicaid folks, or I'm assuming those are the ones who are going to design the program on how to get the money out to everybody. And it should go across the board, not paying just at your Medicaid percentage. One question on testing, it says, so MDHS, there we go.
So MDHHS is looking to fund the test for all staff and residents. When should we know if that will be happening?
We expect to have FAQs on the funding portion of this by the end of the week. That's their goal. FAQs should be coming out, a second round of FAQs coming out today, we think, on some of the staffing process questions, and then by the end of the week, FAQs around the funding process.
Another question on some staff do not have health insurance. Do we pay for the testing and hope for the reimbursement?
This is Kathy. To be compliant with the order as it stands, I imagine that a facility will need to pay for the testing up front and then work through the mechanism to have that money reimbursed through MDHHS. As Melissa shared, actually MDHHS has been working diligently on trying to determine the process for this to happen. And as Melissa shared, we're expecting that information to be out before the end of this month, or this week.
I think we've caught up on the questions that are there. We've got that. Go to the last slide then. Kind of just a quick recap. We got just a couple minutes.
Yep, this is Melissa. Let me tell you just overall kind of what we see potentially coming down the pipeline for us in the coming weeks. On the federal level, ACA continues to advocate for, again, direct funding to not only skilled nursing facilities, but assisted living funding as well. ACA is making, I can call it a very good progress, on the option of getting funding for assisted living providers. And so they, again, continue to have positive dialogue with the U.S. Health and Human Services Agency on assisted living funding for COVID relief. ACA also continues, as I mentioned, to work on funding for nursing facilities, and there's two options, two potentials for this happening. There is funding that remains in the Health and Human Services Fund that you've received your first 3 tranches out of. And ACA right now is working on COVID relief for, they're calling it hotspot payment. So if you had COVID in your building, COVID positive in your building, the money would be directly come for that. So if you had COVID in the building, and again, they're calling the hotspot funding. They think that this has good potential, and they continue to have, again, positive conversations with Health and Human Services on funding relief from the dollars that are already at HHS. And then there is discussion of a fourth stimulus package that is being worked on right now. Congress is working on this. A bill was passed by the U.S. House of Representatives. It was essentially dead on arrival in the U.S. Senate, and that's where it sits right now. But we do believe that between the House and Senate, they do reach agreement. It's not likely to happen until late summer, August, and because that is when Congress will break as well. So all of these issues, the AL funding, the COVID hotspot funding, and a fourth stimulus package, all of this we will see resolution by the end of the summer, because then Congress will break. And again, ACA feels fairly positive that again, this is proceeding in a way that it eventually will happen for us. Again, it won't be on the fourth stimulus package, it won't be with the House passed. There will be negotiation that's happening right now on that, but there'll be likely a fourth stimulus package. Contained in that fourth stimulus package, and this is critical as well, is federal immunity language that ACA continues to advocate for. Some states have varying levels of immunity protection. Some states do not have immunity protection at all. Michigan does have some level of immunity protection for nursing facilities. We do not have it for AL. And I don't know what the ultimate language will be on the federal level. What we do know is that the Majority Leader Mitch McConnell in the Senate has said that he will not advance a fourth stimulus package without some immunity language in it. Now, again, we don't know what that looks like, but he has said that it will only move forward with immunity language in it. So that's very good news for us that Senator McConnell is saying that. Next steps on the state level, of course, of resolving this year's budget deficit. Most critical and urgent, and going to happen here in the next several weeks. And then the completion of the 2021 budget will have to happen before the end of September, the state of the next fiscal year. The Medicaid policy on the using of the 19 costs in establishing our rates going forward. That policy will get formalized. And then, of course, all of the legislative activity that Richie spoke about will again happen in the next several weeks and months here. Advocacy on both the state and federal level continues. We shared with the membership that the $10 one-time assessment happening here in the month of June to continue public relations on the federal level. ACA shared with us this week that because of the issues that I just mentioned to you that ACA is working on, they went back up on TV in the Washington, D.C. area. And this is what we feel made them very successful in the first 3 tranches that we received, and some of the other issues that ACA has been successful on. It was that PR that was happening in the Washington, D.C. area that gave them air cover to advance many of these issues. And again, they just went back up on the air this week to continue work on the issues I spoke of. On the state level, the HCAM Board of Directors approved a $20,000 paid media campaign that just ended the first week of June. It was a digital campaign, primarily focused on the 2 major newspapers in the state of Michigan, the Detroit Free Press and the Detroit News. we had digital advertising up for the month of May into the first week of June. That was coupled with a $20,000 media buy from the MediLodge Group. And we partnered with the MediLodge Group and their paid media campaign that went statewide for the month of May and into the beginning of the month of June on the MLive digital networks, the newspapers covered by MLive, which is the Saginaw News, Grand Rapids Press, and some of our other smaller yet major outlets throughout the state. So during the month of May, we had a $40,000 media buy between both HCAM and the MediLodge Group, all of it kind of just telling our story, telling the care that, amazing care provided by our staff and by our members, and just, again, trying to tell our COVID story, making sure that our narrative gets out there. So ACA will continue their advocacy on the national level and in Washington, D.C., and HCAM is in the process of kind of determining our next steps on a paid media efforts as well. But we wanted to share what had gone on the past several weeks. So that's kind of what's the recap of what we see happening throughout the summer and into early fall.
Thanks, Melissa. And I want to say thank you to Betsy for her information, for Melissa Samuel, Richie Ferran, Kathy Sunland, and Mary Gettle helping us in doing this. There were a couple questions that came after. We are pretty much out of time. We will do an FAQ on that and answer all of the questions, do a couple corrections to the slide deck. So the slides may not be posted for a couple hours yet, later today, so watch for that. We appreciate that. If you have any questions on what we did, just email anybody here at HCAM and we'll make sure it gets to the right person and get you an answer. Thank you and have a good day.